Welcome to The Explainer. Today we are doing a serious deep dive into Thorchain, a protocol that's trying to solve one of the biggest headaches in all of crypto. And we're going to look at this strictly from an investor's point of view. What is it? How does it really work? And does it actually have a shot at winning?
So here's our game plan. We're going to treat this like a proper due diligence report. First, we'll nail down the exact problem Thorchain was built to fix. Then, we'll get into its unique solution and how the machine actually works. After that, and this is key, we're going to stress test it against its rivals and the regulatory monster before we wrap it all up with an investor's verdict.
Okay, let's get right into it. The whole reason Thorchain even exists is because the crypto world isn't one big happy family. It's more like a bunch of isolated islands. You've got Bitcoin Island, Ethereum Island, and so on. And trying to move value between them is a massive pain.
This is what we call the cross-chain problem. At a fundamental level, the Bitcoin blockchain and the Ethereum blockchain, well, they just don't speak the same language. They can't communicate, and this creates huge friction. It forces everyone to use these clunky and often pretty dangerous workarounds just to get from one island to another.
You know, the most common workaround you see out there is the wrapped token. Think of wrapped Bitcoin, or WBTC. When you see that on Ethereum, that's not real Bitcoin. It's just an IOU. It's a promise that somewhere, some company is holding the real Bitcoin for you. And right there, that's the weak link. You're trusting a middleman. What you really want, the Holy Grail, is to swap the native assets directly. Real Bitcoin for real Ether. No IOUs, no middlemen.
And this is exactly where Thorchain steps onto the scene. It offers a totally different and frankly a much more powerful way to build bridges between these separate blockchain economies.
So what is it really? And it's hard. Thorchain is a decentralized exchange, sure, but with one absolutely critical twist. Instead of making you use those risky wrapped tokens, the Thorchain network itself acts as this universal translator, this grand central station, letting you swap actual native Bitcoin for actual native Ether.
And look, we're not talking about connecting a bunch of obscure little chains here. We're talking about connecting the absolute titans of the industry. You've got Bitcoin, the king of digital gold. You've got Ethereum, the world computer for DeFi and NFTs. And you've got Binance Smart Chain, a powerhouse for retail users. Being able to move seamlessly between these three, that's a total game changer.
Okay, so the billion-dollar question is, how in the world does it actually pull this off? How can it possibly handle trades between different blockchains without some central companies sitting in the middle holding all the money?
From your perspective as a user, it feels almost, well, magical. You send your Bitcoin to a special address that the Thorchain network controls. Then, this global network of independent computer operators all agree, yep, we got the Bitcoin. And then, boom, they automatically send the Ether right back to your wallet. The secret isn't a person or a company. It's the incredibly clever economic system that forces everyone to be honest.
So how does it keep those operators honest? This is the secret sauce. Every single person running a node has to lock up a massive amount of Thorchain's own token, Rune, as collateral. Now, if they get greedy and try to steal, say, $1 million worth of Bitcoin, the system doesn't just take their collateral. Oh no, it destroys $1.5 million of it. It's a system designed to make cheating a really, really bad financial decision.
All right, but having a brilliant piece of technology is one thing. You still have to survive out there in the jungle. So let's see how Thorchain stacks up against the competition.
And believe me, this space is an absolute war zone. It's incredibly crowded. You've got aggregators like Live Finance, which are interesting because they sometimes use Thorchain in the background. You've got ecosystem-specific bridges. And then you have completely different approaches, like using synthetic assets. Thorchain's big edge is still that native asset decentralized swap, but it's fighting for every inch of market share.
But beyond the direct competitors, there's another, maybe even bigger threat looming over not just Thorchain, but the entire industry. And that is, of course, the regulators.
For years, crypto has operated in this weird gray zone, especially in the US. The strategy was basically regulation by lawsuit, but that's all changing. In 2025, we are seeing a massive shift towards creating clear, concrete rules of the road. And that brings clarity for sure, but it also brings a whole new world of compliance headaches.
And this isn't just some abstract federal thing. Take a look at California.
Their new law is rolling out in phases, but by the middle of 2026, if you're a digital asset business and you have even one user in California, you're going to need a full license. Now think about how that affects a decentralized protocol that's supposed to be borderless.
And make no mistake, this is happening everywhere. Europe now has its massive MiCAR framework fully online. Global groups are pushing the travel rule, which is basically the same data sharing you see in banking. And regulators are saying out loud that they're coming for DeFi, using this motto, same risk, same rule. That puts a target squarely on the back of projects like Thorchain.
So, after digging into the tech, sizing up the competition, and seeing those big regulatory storm clouds on the horizon, how should an investor be thinking about Thorchain right now? Let's just lay it all out there. Let's talk about the bull case, the reasons to be excited, versus the bear case, the reasons to be very, very cautious.
The bull case is really compelling. First, it offers the purest solution to this massive problem without the ticking time bomb of wraps tokens. Second, because it's truly decentralized, there's no CEO to subpoena, no central server to shut down. And third, that economic security model we talked about is just elegant. It aligns everyone's incentives to protect the network. But the risks, well, they're just as powerful. The competition is brutal and flush with cash. As we just saw, it's a massive regulatory target. That decentralization also comes with trade-offs. Swaps can be slower than on a centralized exchange. And maybe most importantly, its token, Rune, is subject to the absolutely insane volatility of the crypto markets, which can wipe you out no matter how good the tech is.
And that's the thing, right? You can build the most beautiful ship in the world, but it can't escape a hurricane that hits the whole ocean. As we saw earlier this year, a market crash can trigger billions of dollars in liquidations in just 2 days, and it drags everything down with it, good projects and bad.
And you can kind of see that fear reflected in some of the short-term price models. This one here, for example, is forecasting a pretty steep drop for the Rune token over the next 3 months. Now, of course, this is not a crystal ball, it's just one model, but it captures the bearish mood hanging over the market right now.
And so that's the ultimate question, isn't it? Thorchain has built this beautiful, elegant bridge to solve crypto's fragmentation problem. But that bridge was built on the edge of a wildly volatile ocean, with a regulatory hurricane forming just offshore. So the real question for an investor isn't just, is the bridge well made? It's, can it possibly survive the storm that's coming for everyone?